Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on another new edition of Bazaar Morning Call. It's a Thursday morning, getting into the business end of the week. We are coming to you live as always from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi, morning.
Morning.
Hi, morning Prashant, morning Nigel. It's been a crackling market, right? I mean, at a 6-month high. I think it was just a matter of time before the bulls sort of got their act together. But let's see, big day today. You have the RBI policy as well. So I guess all the action could perhaps resume post the policy?
Post the policy or tomorrow, right?
Yeah.
So that's the clock which shows you how far the RBI policy is. It's not very far away, as you can see. Yesterday, once again, we had a solid rally. And it was just quite something to see the market take off and then hold gains, never really looking back, no shakeout, nothing. I mean, actually, if anything, in the last 40-50 minutes of trade, the Nifty added another 50 points. I mean, actually, a little more than that. Starting about a little before 2 p.m., another 50-point move started on the Nifty. We are on the Nifty 160-odd points away from an all-time high. Now, does the global backdrop help us cover that distance? That's the question, right? So let's start with that. The Nasdaq last night ended down 1.2%. The S&P was down as well. And that largely is on the back of the fact that the US 10-year yield has jumped about 14 basis points. And, yields going up is negative for tech stocks. That's a long-established, well-established connection. Why did yields jump and, the sort of tech stocks correct, but yields jump more importantly because, and this is completely unrelated to the US, you had two central banks in Australia and Canada which delivered very hawkish hikes. And that led to firming up of expectations in terms of what the Fed will do. Actually, Fed pricing moved up about 10 basis points over the last 24 hours or so. The Fed meeting is next week, and it's unrelated. They're different central banks, but that's what happened. It kind of brought to fore the idea that maybe there is more to go here. But I would say the story is not the S&P or the Nasdaq, and this is something we've pointed out the last couple of days as well. The action in the US market is moving out of technology and into other areas. So the Nasdaq is down 1.2, but the fact is it is up 30%, 32% this year. So a 1%, 1.5%, 2% pullbacks are absolutely par for the course. You're not even done for half the year, and the index is up 30% plus. So it's quite something. It's also been a constant complaint all this year that only 6 or 7 stocks have been leading the rally in the US, which is now changing, which is the positive. So, the Russell 2000, which is the small cap index, went up about 2%. And the banks index in the US once again moved up 1.5% or so. It started last Friday, and it is continuing this week as well. So I think this is the US market that you need to kind of look at when you're analyzing things and implications for us here. All right, let's just quickly run you through the levels here, which are pretty standard, and they have been for the last couple of days. The all-time high is 18,887.60. The SGX is indicating a flattish kind of start, but the underlying momentum has been very strong. There is the RBI policy, right, today. And there may be a different, a more tepid kind of market, and then a reaction function to what the RBI does and then says, the governor says in terms of commentary, etc. So second half may be a little different as compared to first half. We've seen that quite often. There have been pretty big RBI days as well. Remember the pause which happened, and I think before that as well. So in the near term, the Nifty has the high, of course, is 18,887, 18,888 for all practical purposes. That's the target. There's nothing between where we are and there. Supports 18,531 and then 18,464 are the two near-term supports. But there's distance between where we left off yesterday, and these levels. Bank Nifty, it continues to be stuck between this range of 44,499, which is, on the downside, and 43,706. So this is the level. The resistance and the support levels for the Bank Nifty are on your screen. But for the Bank Nifty also, I would say, given the underlying kind of momentum and strength we've been seeing, possibility of breaking out of this range, I would say, is on the upside rather than on the downside. It's just been that kind of a market. Broader markets in mid-caps, small caps, etc., that's something we've highlighted over and over again, and action there continues absolutely unabated. Sonia, hi.
Oh, absolutely. And, the bulls are in complete control of the market now, right? I mean, you can see it in not just the last few days, but the trajectory in the last few months, ever since the lows that we saw in the month of March, is just higher tops and higher bottoms. And just a matter of time, I guess, before we conquer those all-time highs. So the market structure remains very bullish at the moment. And the Nifty, as Prashant was also mentioning, closed above the recent high of 18,662. It's now broken above that trading range that the market was hovering in. 4 straight sessions of gains, and from the 24th March lows, which was about 16,950, there's been no looking back at all. It's not dithered even once. So higher tops, higher bottoms, and 10.5% rally from there. Both foreign and domestic investors bought in the cash markets yesterday, so that's always great to see. There was about 400 crores of buying by DIIs, about 1,500 crores of buying by FIIs. And although the monetary policy is today, there's a pause expected. I don't see any impact on the market. I think the market will just wait for this event to pass and then perhaps resume its uptrend. At least that's the feeling that you get when you look at the ticker. All eyes will now be on the FOMC meeting on the 13th and 14th. And in that context as well, a lot of economists suggest that inflation is cooling off. It's still above the central bank's 2% target. So there could be a pause this time around from the US Fed as well. But the bulls are back, and back in a big way, Nigel. What are you spotting in terms of a big trend?
Well, I'm wondering, how much of the RBI governor's dovish tone is priced in? Because yesterday the street clearly was pricing in a dovish tone. What more does he need to say for, to strike that chord that the bulls are looking forward to? The Nifty Bank, well, that's going to be the one that will need to come in there and deliver the knockout punch to the bears. Because yesterday as well, there was a relative underperformer. If we need to get to those fresh all-time highs, which is only around 150 points away from current levels, then the Nifty Bank needs to perform. And just one word of caution, there are very, very good stocks in the mid and the small cap indices. And in the mid and small cap space itself, a lot of smaller companies which are doing well, some of them have very, very good fundamental value as well out there. But just be a little bit cautious, because in the last few days, what you have been observing is some of these stocks, they are racing off, but maybe the fundamental reason may not be there. So you'll want to be a little bit cautious in the broader market. Just a word of caution on that front. On the index itself, yesterday we ended higher, and if you're looking at the open interest build-up, it was solid. So there was fresh buying on the Nifty futures itself. The Nifty, if you're looking at the FIs, well, they added long positions. They added long positions big times getting into this event. So they added good amount of long positioning, and they wrote puts as well to back it up. They wrote more than 2 lakh puts in a single trading session, 2 puts for every 1 call. And a couple of strikes were active, 18,700, 18,650 put. Between them, they added close to 2 crore shares, telling you the kind of writing that we've seen. And there was some out-of-the-money call buying. In case things go right, then the bulls will be happy, and maybe taking a bit of a punt. 18,850 call was fairly active. The only word of caution is the PCR now has moved to around 1.38. That's the higher end of the band. Normally, we have seen when it goes to around that 1.4, we see some bit of a pullback, or we see some bit of consolidation. So the PCR has moved to the upper end of the band. So on the upside, we can go to any levels, but I just thought in the near term, for today itself, the Nifty, you wanted to hold on to that 18,650 because that was a bit of a resistance on the way up. And the 20 DMA on the Nifty Bank, 43,951 odd. SGX is indicating a mildly green start, but we'll wait by for the RBI governor and take it from there, guys.
Okay. I also wanted to mention that there was a very interesting note that Motilal Oswal put out, I think yesterday, post-market hours, where they talk about how the corporate profit to GDP ratio has gone up substantially in 2022, and they expect it to go up further, considering the economic signs which are very strong for the economy. So there's oil and gas, there's auto sector, there is a couple of other sectors as well that they're bullish on. But corporate profits to GDP ratio surging in 2022, and the expectation is that it could improve further in 2023 as well. So that's just one point that I wanted to put on the table. Apart from that, we have commentary coming in from Bernstein this morning as well. Venugopal Gare of Bernstein saying that while the rebound has been strong and consumption indicators point towards a bottoming out, some externalities need to be watched before building the case for a further rally. The Fed action and monsoon throughout this and the next month will make things a lot clearer. Venugopal adds that domestically, the pace of consumption growth and how it recovers from bottoming remains to be seen. But even with several positives looking forward, they are waiting for a few catalysts to make a more bullish call. Bernstein remains constructive on the market as they expect it to hold up at current levels and see interest essentially in small and mid caps remaining for a bit longer.
Okay, let's get you some money market views as well. On the rupee Parul Mittal Sinha, Standard Chartered Bank says the dollar INR traded in a narrow range last week, with a dollar staying the key forex driver, even as RBI stayed focused on containing volatility. She expects the rupee to trade in a range between 82.25 to a dollar range, with light positioning ahead of the FOMC next week.
And on the bonds, Parul says that the bond yields traded range last week despite a volatility in global rates. Domestic liquidity improved, making RBI to mop it up via the VRRS scheme. She sees the Indian 10-year benchmark yield trade in 6.9 to 7.05 range next week, with the pause seen by the RBI MPC and the FOMC in the MPC today. Standard Chartered is expecting no change in stance and a cautious guidance today.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We'll be looking at Tata Motors, Tata Communications, Mazaar Dock, Gati, Aether Industries, and Titagarh Wagons, all of them on the back of positive news flow. But on the flip side, IOC, HPCL, BPCL, and Deepak Fertilizers, well, we'll be watching out for them on the negative side.
Okay, well, let's welcome in Ed Yardeni. He's president at Yardeni Research. He's joining us right now to take some questions. Ed, good to have you with us here. Good morning. Thanks very much for your time. I want to start with the broadening out of the U.S. Markets. I think we're in the early stages. I don't know if we can conclusively say it's happening, it's going to happen or not, but there are first signs. The Russell has been rallying for the last few days. The banks are doing well. And it's moving out of techs. It bodes well, right, for the health of the overall market out there in the US. Will look healthier and healthier if this continues?
Absolutely. It's a very, very good point, a very important point, because I do think that the market bottomed on October 12th. I do think we're in a bull market. And it was a very broad bull market at first until the banking crisis hit us in March. And that's when the market started to narrow dramatically. People started to run into the mega cap 8 stocks, figuring that they would not have to rely on banks and that they generate a lot of cash flow. And meanwhile, they ran out of financials and also energy, because the fear was that if we're going to have a bank crisis and it's going to be a bad one, then the U.S. economy would fall into recession and we get lower oil prices. Again, the bulls, like myself, were saying the market doesn't necessarily mean, the narrowing market doesn't necessarily mean that it's going to go down. It could broaden again. And I think that's what it's exactly doing, as people are getting more confidence that the financial crisis is not going to spread, that it's been pretty well contained.
So we are in a bull market. Ed, good morning. I think the bulls would love to hear that, right? Even in the Indian markets, the Nifty has sort of, seen a good growth of almost 10% from the lows that we saw in the month of March. Do you think there is more to go on the upside for emerging markets like India, or do you feel that a lot of the good news perhaps is already in the price?
Well, because we've had such a big move in the U.S. market led by basically 8 stocks, investors, I think, are starting to be concerned that they might be missing a bull market. And so they're going to be looking for good values. In the United States, I think they're going to find that the financials are good values. On a global basis, I've been keen on India. I think India is benefiting from the Cold War between the United States and China, really the Chinese and the Western world, if you really want to broaden it out. And meanwhile, the Chinese recovery from the lockdowns has been disappointing. The price of copper has been kind of weak, which suggests that the manufacturing sector in China is weak. And the consumer sector that was anticipated to be very strong coming out of the lockdowns has been somewhat disappointing. So I think we have seen that the Indian market has outperformed the Chinese markets and a lot of other emerging markets. And I think that may very well continue.
All right. Good morning, Mr. Yardeni from here in India. My question to you is, the volatility index is almost at pre-COVID levels. So it seems investors out there, they're not really concerned about the kind of rate hikes we've got, or maybe it's not had that kind of impact on the economy that was earlier thought about. Do you think it's, investors are being a little too casual about this? Because we're only looking at a blue sky scenario for now. Your take?
Right. That's a very good point. I'd much prefer to see a lot more fear and the market kind of go up a wall of worry, which is what it's really been doing. But now, because the market's done so well and the economic data has been surprisingly good for those who were anticipating a recession, we are seeing more bullishness. I like to look at the so-called bull-bear ratio that Investors Intelligence puts out, and that's running around 2.0, which is kind of neutral. When it's 1 or 0, you really want to load up on stocks because from a contrary perspective, there's a lot of fear. It's not anywhere near 3. Once it gets to 3, I'd be more concerned that there are too many bulls. So at this point, I would say that sentiment is kind of neutral.
We got that. Ed, thanks a lot for stopping by and giving us a quick take on the markets. The Nifty, in any case, is inching towards a lifetime high, so we're almost there. But not there quite yet. I think it's just a matter of time. In the meantime, of course, we have big events like the RBI policy upon us today. Let's slip into a quick break. On the other side of the break, our entire research team will be joining in to help us with the top 10 list of stocks.
IQ Lighting Limited, an Indian manufacturer of LED lighting solutions focused on sustainability and providing low-energy LED products to help India meet its sustainability goals. Initial public offering of equity shares of face value of 10 rupees each through the book building process with a price band of 270 rupees to 285 rupees per equity share. Bid offer opens on Tuesday, June 6, 2023, closes on Thursday, June 8, 2023. For risk factors and more details, please refer to the RHP available on the websites of SEBI, the book running lead manager and the stock exchanges.
Who said you need 4 doors for your fam?
Just cut the crap, man.
The surprisingly spacious MG Comet EV. The no-nonsense car.
Keeping up with the pace of life is not easy. To find the perfect balance, we need to savor the pause. See? It never ends.
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell, right at your fingertips, making gold your strategic advantage.
Without which your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
डायबिटीज कंट्रोल करने के लिए आपने इतने स्टेप्स उठाए।
नो थैंक्स।
तो हमने भी आपके लिए एक कदम बढ़ाया। बजाज अलियांज लाइफ इंश्योरेंस प्रेजेंट्स डायबिटिक टर्म प्लान, इंडियाज ओनली टर्म प्लान एक्सक्लूसिवली डिजाइन फॉर डायबिटिक्स। ये प्लान आपको हेल्दी लाइफस्टाइल अपनाने पर रिन्यूअल प्रीमियम्स पे रिडक्शन देता है। समझो हो गया।
Welcome back to Bazaar Morning Call. Well, today is the RBI's monetary policy, and the CNBC-TV18 poll as well as our Citizens MPC have unanimously forecast a no-rate action policy or a pause this time around. But what else can be market moving from the MPC standpoint? Lata is here with her editor's take. Lata, big day today, but seems like not too much action expected.
Well, I think the big thing will be the forecasts, the GDP and inflation forecasts, because inflation numbers came in lower than what RBI forecast for April, May, June. So they have to lower it, probably, by 50, 60 basis points. They had 5.1 for the first quarter. They have to bring it down to maybe 4.6, in which case the entire average goes down. That's good news, if it comes partly factored in by bonds at least. GDP, again, we know that the fourth quarter came in higher. So when you start with a higher base, will they also revise it higher? Not very sure, because already RBI was higher than most other people. But if that combo comes, then it's really superb. Now, all these calculations, especially CPI, have gone for a bit of a jitter because of the overnight news. MSP has been raised by 5 to 10%, and fuel price, Sapna's story, likely to be cut by 2 to 5%. Now, this 5 to 10% MSP hike is lower than most other pre-election years, but much higher than the BJP's previous 4 years. Now, what economists tell us is that anyway, because of El Nino fears, rice has been rising. So they have to raise the MSP price, otherwise no farmer will go and sell it to them. Therefore, it is priced in. Even by the economists, it's discounted. Fuel price cut was expected closer to October for Diwali and for the state elections. So it was not as if that was not factored in by economists, except that it may come, if you go by Sapna's story, a little earlier. So they are not changing their forecasts, but there is a slightly dovish tint now to the expectation from RBI. If this combo comes, a slightly higher GDP forecast and a slightly lower inflation forecast, if you have a list of all the stock experts for all-time highs, please keep them. I mean, that combo is too good for the markets. For the bond market, the stance will be very important. If you remember, that withdrawal of accommodation is their stance. If it's withdrawal of accommodation means I'm still going to hike. I'm withdrawing the accommodation. Now, if he changes it, last time he very clearly said this is only a pause, not a pivot. If that is re-emphasized, then the bond markets will sell off a bit. If it's softened in some fashion, it'll be very good for bond markets. But I don't think this is impacting. I mean, of course, if he hints for a cut, then it'll be great for all the interest rate sensitive stocks. But no one doubts he will go that far. There is 2 FOMC meetings. A July hike is even expected in the FOMC. There is an El Nino, fear hanging. So that he may not do. Let's not expect it will be that bullish that he will, hint a cut.
Okay, all right, Lata. So the RBI governor comes into bat. 160 points is what is required. You said to get the all-time highs out, right? 18,888. December 1st is when we visited that. We'll stay tuned and let's hope there is a pleasant surprise that's coming in there from a bullish perspective.
I am sure he doesn't consider himself as the batsman, but more as in the commentary box, talking about the economy. So he won't be out there to score, is my guess.
So then we'll give cricket a bit of a break. We'll wait for the RBI governor. We'll play out expiry and then post-market, we'll stay tuned to India and Australia. Thanks so much, Lata, for joining in. Well, that's about the RBI and what to expect from there. But we have got a lot of individual stocks that we're focusing on in our special top 10 segment. Sonia, you go first. Tata Motors.
So, as we heard, right, the Tata Group will be investing $1.6 billion into that battery manufacturing plant in Gujarat. Now, they had an analyst meet yesterday and the takeaways were quite positive. So, I just wanted to put that on board. Agartas Energy Solutions, which is the company that will be, developing these capabilities to deliver batteries. They will be supplying a range of batteries for across all vehicles, whether it's passenger vehicles, commercial vehicles, for the electric vehicle space. So they're very bullish on the EV sector. They aspire to be at the forefront of the global battery manufacturing industry. And they say that supply chain optimization is the goal for them. They're looking to establish a cathode active material facility as well adjacent to this gigafactory to ensure uninterrupted supply of key materials. And this is a very big step forward in terms of, localization, bringing down their costs, supply chain, etc. For the EV space. Now, they're working also on a solid-state sodium battery, vertical for the EV bus segment in the medium term. So not only passenger vehicles, they're focused on commercial as well as the bus segment too. And the company continues to maintain its target of reaching double-digit EBITDA margins in the medium term. A lot of brokerages have written on Tata Motors post the analyst meet. I just chose to put forward one of them, which is Nomura. They say that Tata Motors has all the levers in place to gain further market share, and they have new product launches like the Curve, Sierra, Avinia, and the network expansion, which will aid their market share as well. So once again, I'm going with green on the stock. Despite the stock being at 52-week highs, there could be some more traction.
Okay, I'm sticking to the Tata Group. Then I'm tracking Tata Communications. They had an analyst meet, and the key takeaways is what I'm going to state out. They're indicating that they're looking to double the digital revenues. I think it was around 14,000 crores. Or they're saying by FY27, they're looking at it going to around 28,000 crores. The margins, they're saying that it's likely to be in the vicinity of around 23 to around 25%. And the ROCE, they are factoring in at around 25%, which is maintained, what they've mentioned in the past. CAPEX, it appears it's a little bit higher than what they've done in the past. That's around $300 million odd. And the net debt to EBITDA, well, it's currently at around 1.3. They're saying that it will stay below that 2 times net debt to EBITDA. Finally, they also mention about the monetization, which they have been talking about. So they're clearing titles. They're making some of these assets ready for monetization. We'll have to see how that works out with regard to their capex plan. And in the last few quarters, they've been reducing debt. So we'll have to keep an eye out on that and see how that moves as well. We'll be chatting with the management as well in the next 1 hour or so. So stay tuned to that conversation.
All right. Well, so we'll keep an eye, and of course, the management chat also coming up. Now, this is an important story. In a political nudge to oil marketing companies, the government expects refiners, OMCs, to reduce fuel prices at the pump. Sources say this is on the back of health of OMCs, which is being perceived to be close to normal now. HPCL, though, remember, booked net losses of almost 9,000 crores in FY23. But incrementally, the government sees health improving, and hence the nudge to cut prices. Sapna is here to tell us more. Sapna, hi, morning.
Hi, Prashant. Morning. Extremely well put. So that's what the scenario is. Government has been saying close to normalcy and within bounds of legitimacy. I mean, whatever may be legitimate, at least pass on some benefit to the consumers. The perspective here is that the consumers expect fuel prices to be stable and then trend downwards. So I think the hint over here also is not just in terms of the daily price revision, which has been frozen since April last year, post the Ukraine conflict. I don't think that's what they are talking about. I think what they want basically is, companies to, kind of cut price. Basically, that's it. Whatever maybe in the realm of possibility. And they have not spoken about any timing or by how much. All of that has not been said. It's a simple message coming in from government quarters. A simple but strong message that some benefit needs to be passed on. We did ask about the accumulated loss issue of companies. So as you rightly pointed out, HPCL is the one that is still suffering. Yes, in the last 3 quarters or rather in the last 2 quarters, the losses have really come down. They started off with 21,200 crores end of Q1 last financial year, and we are now down to around under 9,000 odd crores. So some bit of recovery still has to be made, but the government still expects the current quarter to be good. So the companies had a good quarter last Q4, and again they expect it to be a good quarter. So I think there is a clear message and a bit of pressure from the government. It remains to be seen how the OMCs respond to that. Do they really go ahead with the price cut? And if yes, in what form, fashion, and when?
All right. Thanks a lot for that, Sapna. We'll keep an eye out on all these stocks, HPCL, BPCL and IOC. But let's move on. Mazgaon Shipyard has been one of the strongest stocks in the last many days. Gati is also on our radar. Vivek is here to tell us more about that. Vivek, hi, morning.
Well, good morning. I'll take you through, the operational update for the month of May that Gati has shared first. So what Gati is saying is that total volumes for the month of May, including the surface and the air express segments, has come in at close to 98 KT. Now, this is up 9% on a month-on-month basis and has gone up by 1% on a year-on-year basis. What the company says is that on a year-on-year basis, actually, the base quarter was quite strong. Now, coming to Mazgaon Shipbuilders, along expected lines, the company has signed a memorandum of understanding with ThyssenKrupp Marine Systems. Now, this particular MOU is for the development of submarine systems that they would be building and developing in India and for the Indian market. Now, what would be the scope of work as far as ThyssenKrupp Marine System is concerned? They would be contributing, the technology mainly, so engineering and design of the submarines, as well as consultancy, while Mazgaon Dock's responsibility would be construction and delivering the respective submarines. An important development, however, important to see, what kind of orders that this particular JV does get in.
Okay, all right. Thanks a lot for that, Vivek. Well, let's go across to Sonal Bhutra. She's joining in to tell us about some more stocks that she's tracking. Morning, Sonal.
Good morning, Nigel. Well, 3 stocks on my radar today. Let me start with Aether Industries. They have filed a letter of intent with a US-based company, which is a global oil field company, and that is where they will be contract manufacturing 4 products for the company, and the total volumes that they have to deliver is 16,000 tons per annum. But again, it's a letter of intent. We'll have to see how the execution and the final agreement goes on this one as well. For Titagarh Wagons, they have a board meet that is on the 10th of June, and this is to evaluate and approve fundraising. This would be via issue of equity shares or other securities as well. Deepak Fertilizers, we have been speaking about a block deal. So 2 entities have sold Deepak Fertilizer shares worth 131 crore rupees in the open market. One of them is an FPI, which is Small Cap World Fund, which has sold 23.54 crore shares, which is around 1.86% of the stake in the company. And post this transaction, Small Cap's holding in the company will fall to 3.08% versus 4.94% earlier.
Okay, thanks a lot, Sonal, for that. Well, let's do a quick recap on all the stocks that we have on our radar today. Stocks with positive news flow. There's Tata Motors, Tata Communications, Mazagon Dock Shipbuilders, Gati, Aether Industries and Titagarh Wagons. While stocks with negative news flow today, IOC, BPCL, HPCL and Deepak Fertilizers. But what also, stays relevant is what's happening in the world of crude. Manisha Gupta joins in to give us a quick update on all of that. Manisha, oil prices have been on the rise because of the Saudi output cut. Tell us a little bit about what the way forward could look like.
Well, yes, that is the reason we have seen support continue for the crude oil prices. Since the Saudi Arabia or the OPEC and allies meeting, we haven't seen the crude prices come below $75 a barrel. There has been more support after the U.S. crude oil inventories also have seen a decline. And there is a Citi report now which says that for the rest of this year, you could be looking at the crude oil prices ranging between $72 on the lower side to $90 a barrel on the higher side as well. So while the crude prices are trading in the positive, that's really not the case for the metal prices. You have gold and silver yet again trading at a 2-month lows. The surprise rate hikes in Australia and Canada seem to be weighing on, and so does the fact that there is strength in US dollar and treasury yields as well. The China trade data came in on the weaker side. The China copper imports especially, fell by 4.6%, and that's weighing onto the copper prices right now. With the China trade surplus shrinking to a 13-month low, the markets are anticipating a stimulus to come sooner than later, and that is what is keeping a support in metal.
All right, Manisha, thanks very much for that. So that's copper and commodities in focus. We'll take a very quick break here. We'll come back. We'll get you an exclusive conversation with Niranjan Gupta, CEO, Hero MotoCorp, to decode challenges in the electric vehicles segment. Later, we'll connect with Deepan Mehta, Elixir Equities. Lots of stocks to discuss. It's a market which is buzzing with mid-caps and small caps. The discussion coming up. And later, the management of Happiest Minds also joins in to discuss the downward revision we've seen by some global IT services companies and the implications, if any, for Indian peers. Stay tuned.
IQ Lighting Limited, an Indian manufacturer of LED lighting solutions focused on sustainability and providing low-energy LED products to help India meet its sustainability goals. Initial public offering of equity shares of face value of 10 rupees each through the book building process with a price band of 270 rupees to 285 rupees per equity share. Bid offer opens on Tuesday, June 6, 2023, closes on Thursday, June 8, 2023. For risk factors and more details, please refer to the RHP available on the websites of SEBI, the book running lead manager and the stock exchanges.
Helps beat sensitivity fast. Sensodyne Rapid Relief.
नई कार तुमने कार इंश्योरेंस खरीदा होगा एगो ऐप से नहीं
आपको नहीं तो
कोई बात नहीं मूर्ति गलतियां होती रहती हैं कोई जरूरत नहीं है चेक करने
नई कार खरीदने से पहले एको चेक करें और 36,000 तक बचाएं।
एक है जमीन मेरी, एक है मौका मेरा, इसमें सब लगाऊंगा, अपने इरादों से मजबूत एक घर बनाऊंगा।
हाँ शुक्ला जी, भिजवाना सिर्फ अल्ट्राटेक ही।
अल्ट्राटेक ही क्यों?
आप ही ने तो कहा था कि घर जिंदगी में सिर्फ एक ही बार बनता है।
घर एक, मौका एक, इसलिए सीमेंट भी देश का नंबर 1। अल्ट्राटेक, इंडियाज नंबर 1 सीमेंट।
IQ Lighting Limited, an Indian manufacturer of LED lighting solutions focused on sustainability and providing low-energy LED products to help India meet its sustainability goals. Initial public offering of equity shares of face value of 10 rupees each through the book building process with a price band of 270 rupees to 285 rupees per equity share. Bid offer opens on Tuesday, June 6, 2023, closes on Thursday, June 8, 2023. For risk factors and more details, please refer to the RHP available on the websites of SEBI, the book running lead manager and the stock exchanges.
Welcome back, folks, to Bazaar Morning Call. Well, Hero MotoCorp is one of the stocks which has had a great run in the last couple of months, but it's also had a lot of challenges at hand, and one among them is the transition to electric vehicles, and another is to maintain leadership. Very recently, the company, which is the world's largest producer of motorcycles, announced a change at the board level. My colleague Parikshit caught up with the new CEO, Niranjan Gupta, and began by asking him his priorities as he takes on the new role. Listen in.
In the core categories, our role will be to expand the pie because we're already leaders. So there's no point trying to just defend, recover, or gain a bit and lose a bit. There, our role is to expand the category and expand the pie. And India and the world has got huge potential. The second big will be win in new segments. And I would call out just one of them. There are many. Premium, for instance. That's a big pie in which we need to win. Right. And you will see a lot of actions on that front that's coming out. Right. Third, I would say, is build leadership in EV. Because that's a new segment that's coming up. Yeah. And we've already taken lots of strides in that. And the focus will be on that. I'm just singling out a few ones. Doesn't mean that these are the only ones in terms of the business priorities. And of course, the way we are going to do this is by focusing on people on one hand and customers on the other.
Right. So following the announcement of you being made the CEO, there were other restructuring measures that took place in the company as well, including BRS. Why was that done? How many employees have taken that? And why is it important for the company?
So Parikshit, from time to time, every company has to go through refreshing, talent churn, in order to ensure that the talent is future ready and future fit. We had not done that in Hero for a long time. And therefore, we felt the need to actually refresh our talent so that it provides, as I said, the talent needs to be fit for the next 5, 7, 10 years' time. And it was that exercise which was done, which was the management VRS. In the spirit of our philosophy of care, it was done with a very industry-leading package which was handed out to people. Overall, around 10% of the staff took the VRS, and that paves the way for the future in terms of building the organization, much simpler organization, de-layered, simplified, which will ensure that the speed at which we move will be much faster than what we have been doing.
Right, so you're saying 10% of the staff has taken BRS. Is the exercise over, or will that be done again in a few months?
So the current exercise is over. What's very important to understand is that the focus will be more and more on the outcome and performance. So we'll make it far more performance-driven and outcome-driven organization than an activity or action-driven organization.
Right, so that is your priority, to make it a performance-driven organization. Right, now speaking in terms of your distribution strategy, you mentioned 3 or 4 pillars that you would be working on. Let's begin with distribution. How do you plan to change that?
This coming year, we'll see the maximum number of premium launches as compared to any other year in Hero's history.
Okay, you can watch that entire conversation and excerpts from the conversation with Hero Moto CEO Niranjan Gupta all day today, only on CNBC-TV18. All right, Deepan Mehta is now with us, Director at Elixir Equities. Deepan, good morning. Great to have you with us here this Thursday morning. Important day. There is the RBI policy, which we will get to in just a bit. But I want to start with, I think a space which I'm not sure you have a very favorable view on, oil marketing companies. Just yesterday, there was a Morgan Stanley note which we highlighted, which basically said that integrated margins for OMCs are at the highest now, and this should help them recover past losses over the next few months. That stocks are cheap, they should do well. Today, our colleague Sapna from Delhi tells us that, the government is basically nudging oil marketing companies to cut prices. It very starkly highlights the problem for investors, right? Good news for consumers, filling in their tanks at the pump. But if you're an investor in the space, this is the problem. Stocks, by the way, yesterday ended about 4-5% higher. Your thoughts?
Yeah, Prashant, thank you for having me on your show and good morning. Yes, I think that the oil marketing companies are doing human service and certainly they are fulfilling the objectives of the consumer and their majority shareholder, that being the government of India. But that's at the sacrifice of the minority shareholders. I have never invested in these companies for the last several decades or so. And I don't think that anything is going to change structurally in the near future for me to change this view. All rallies are rallies to sell the stock. You may have a trading position from time to time. It's a great hedge against oil prices, in the sense that if oil prices go down, and if you have that view, then certainly you can buy the oil marketing companies. But there is no long-term case to invest in these companies unless they are privatized, all of them together. Because even if one or two get privatized, it's still the government which decides the prices, and that sets the tone for the industry.
Dipan, hi, good morning. What do you do with a stock like Tata Motors now? It's rallied significantly this year, up 40%, but now the company is very confident of this whole EV piece. They've put in a lot of money to work as well. Has most of the juice, has most of the run in the stock done, or is there more to go, you think? Is it too late?
Yeah, good morning. Thank you for having me on your show. See, I think Tata Motors is very volatile when it comes to earnings as well as stock price. And if you get that particular price movement right, then certainly it gives great returns. But look at it on a longer term fundamental. First of all, it is more expensive, at least the JLR piece, than some of its peer group companies. Secondly, I think the entire auto industry, the way it is going towards electrification, certainly the margins are going to take a big hit over there. These are not like the margins which you get from the IC engines. The margins are significantly lower because there's hardly any backward integration with these companies have done into batteries. So that's the second part. And thirdly, a large portion of Tata Motors revenues comes from global markets, where there are still, I think, question marks on the demand side. And while there is pent-up demand and a large booking in place, but once they're over and done with, I'm not sure they can sustain these kind of volume growth rates. And lastly, I think I'm not sure Tata Motors is now continues to gain ground in the domestic market. So keeping the valuation, keeping the kind of growth prospects in mind, I would like to be underweight in Tata Motors. I think you may get a higher return than the likes of Mahindra & Mahindra or Maruti for that matter.
Got that. FMCG is coming back into some kind of sort of activity. Britannia, Tata Consumer, Nestle, these were some of the largest Nifty gainers. Any view on these names, Deepan?
Yeah, I think that the overall improvement in rural sentiment is certainly helping the sentiment in these stocks as well. And these are the companies you named, all three of them. The common link is that they have a large portion of revenues coming from under-penetrated markets or segments which are not as mature as, say, soaps, detergents, shampoos, or hair oils for that matter. So we need to be a bit selective when it comes to FMCG. Very positive on Britannia disclosure. We and our clients are invested. And it's a nice kind of only two-player market, the biscuit business. And they're certainly trying to move up the value chain and enter into other food products, which is also quite positive. Nestle also, I thought the numbers of Nestle were very good. I would treat it amongst the best amongst the FMCG, given its scale, size, and base effect. And Tata Consumer is all about acquisitions and about growing the categories they are present in. All of these three companies are on the expensive side, but I think in terms of growth rates, they will not disappoint you going forward. And maybe their prospects are better than some of the other companies which I said which are in the mature categories.
Okay, well, all right, that is Samaran Chakraborty's view on from Citi coming through. But Dipan, I just had one question for you on Happiest Minds, and I want to ask you that because we are heading into a conversation with the management in just minutes from now. You track this entire space. Do you like this stock?
Yeah, Sonia, actually, we've been invested in Happiest Minds since listing and no complaints over there. It's one of the highest growing, fastest growing companies within the mid-cap space, but always been very expensive because of the management quality and because of the type of business and projects which they do. But keen to hear what they have to say, and maybe I can ask a question or two.
Oh, of course. I would love for you to join into the conversation as well, since you like this stock. And you've tracked the stock for so long. But the topic in focus is that downward revision and guidance by global IT services player EPAM, which hurt all of the IT stocks a couple of days ago. Now, EPAM has said that clients have become even more cautious with spending and there is some reduction in the order pipeline. So to discuss more of the impact on this and on the sector, we have the management of Happiest Mind joining in. Venkatraman Narayanan, who's the managing director and CFO of the company, is with us. Mr. Narayanan, good morning and thanks a lot for joining in. So, EPAM has raised alarm bells, right? Both in terms of spending as well as demand in the tech sector. But in your assessment, how has demand been? Have you seen any deferral of orders, any cancellations up until now? And is that a legitimate fear?
Sonia. Because on the show, starting with EPAM, I think they started with a forecast or a guidance of 9% growth. which has then subsequently been revised, as we saw in the news a couple of days back. And they are talking about a negative growth because they see immediate concerns within their customer set. So while Joseph, my colleague, will talk a lot more about the market, the demand, the situation within our customer set, we have not seen any cancellations. We have not seen any postponements as of now. In fact, we are having, in a couple of large deals that we signed in Q4, we are having staffing issues in terms of getting people and ramping up to the required numbers. So while that's a good problem to have, that's something that we need to solve internally. It is not showing up on our customer set having any issues. There were certain, prioritization changes and expectations in Q3 of last year, which did overflow into Q4. We had some certain amount of those revenues right shifting into the current year. Taking in all of that into consideration and looking at our customer set, we had said we'll do 25% growth in the current year as well. And that's the kind of guidance that we have given as of now. And we are not changing it. And we are holding on to that while holding on to the EBITDA guidance of 22 to 24%.
All right, so EBITDA guidance of 22 to 24% is something you're holding on to, and you're also confident of achieving the 25% revenue guidance in FY24. Got that. But can you tell us a little more about the deal signings? How many deals have you signed up until now in the month of May? What have the deal contours look like in terms of the quantum, etc.? And are there any deals that are getting pushed forward? Because that is the narrative, that we are getting to hear in the IT space, that there are no cancellations at the moment, but some of the deals are just getting deferred.
The strongest sign-up of deals in Q4 of last year. We signed 17 new logos. And as we speak, we are ramping up on many of them while also meeting the demands from our existing customers. We don't talk about what's currently being signed, because that's something that we'll talk about in the current quarter's call. But looking at 17 numbers that we have signed, deals that you sign in the quarter typically don't pay off in the quarter. It starts, you have to work, you have to bill, you have to book, you have to realize, and you have to recognize those revenues. So there is a little bit of work that has to be done. So what we are doing right now is building our the revenue numbers basis what we have signed in Q4. On top of that, you would have seen almost 92% of our business comes from repeat customer business. So that's also right now we have not seen any weakness. While in Q3 of last year we did talk about certain reprioritizations, people have come out of that, and they're talking about starting to invest. And just a general comment, if you look at all the analyst reports and the reports that are coming out right now, most companies are expecting a nice pickup in Q3 and Q4 of this year. That's the September, October, November, December, and the Jan, Feb, March quarter of the current financial year.
Venkat, hi, good morning. Prashant here. This waiting for this recession in the US has been a long game, right? And maybe, who knows, it may not show up this year.
I know.
But it's been like an endless wait. I want to just ask you about the edutech space, right? Which is about 0.25% of your revenues, as we understand it. You don't now do content creation for these companies, but you help them set up platforms, etc. Now, education often comes up as one of the areas which will be disrupted because of this generative AI, new technology. Are you seeing anything? I mean, what are you hearing is what I want to know, without being very precise about what the impact is, which I'm sure you don't have a handle on right now. Is it going to be disruptive?
I have my colleague Joseph on the call. He is rightly placed to give you...
Let's Joseph, welcome to the call.
Yeah.
If you heard the question...
I didn't hear the question.
Go on.
Sure. So if you look at, I'll first take the overall EdTech segment and what we do, and then get into ChatGPT. You're right that that the content creation part in EdTech is a little challenged right now, but we are working with customers to develop their digital platforms for the education segment. And even within this, if you look at the subsegments, you have three broad subsegments, right? You have the K-12, you have the higher ed, and then you have professional development, where you have corporate and upskilling, multi-skilling, and things like that. So both K-12 and professional development continue to do well. There's a lot of investment happening. And in higher ed, they're selectively investing more on adaptive learning, predictive learning, intervention, and things like that. So that's serving us well. We've had a couple of very good closures in the last 3 months in this space, including one in India, where most of us think that the edtech segment is challenged. We had a multi-million-dollar win actually in Q4. Coming to ChatGPT, it is it can be an opportunity and a threat for this segment, right? Because a lot of this is content-driven, and what ChatGPT does is it gives you easy access to content and sort of curates the content for you. And unless the edtech companies make sure that they protect their content well, it could be a risk. Otherwise, they can use ChatGPT to actually enable and add a lot of value. And therefore, I think it offers a lot of exciting opportunities as well. We are working with a few customers on initial concepts and POCs as we speak.
Okay, got that. Venkat, just to come back to you, your 1,400 crore QIP, the board and shareholder approvals are valid till October of 2023, I understand.
That's right.
Do you plan to exercise this? Are you looking to raise money in this period, 4 months?
Yes, there are 2 points I would like to make with regard to that number. You did talk about 1,400 crore QIP. That was an outer limit that we had placed out there when we took the enabling resolution. We are currently looking to close that. But, markets have been, it's essentially dependent on markets, and pricing is also market dependent because it's formula driven. So there is there is some bit of work that's happening, and hopefully we'll have some closure on that.
Okay, just before we let you folks go, we also have Dipan Mehta of Elixir Equities, who is on the show with us, and he's been a long time observer and investor of your stock. So Dipan, over to you. Any questions that you have for the team?
Yeah, thank you, Sonia. First of all, thank you very much. I think investors like us who have been through the IPO with you have got a very good return on our investment. My question is more of macro in nature, and I've been tracking the IT industry for more than 2.5 decades. But I have not seen this kind of confidence and earnings momentum and this kind of a difference between large cap and mid cap growth rates. So what is going right for mid cap software companies such as yourself? Is it better acceptance from the Fortune 500 companies, skill sets, right selection of vertical? What has gone right for mid cap that now they're able to grow at high teens, kind of at least half a dozen companies, high teens type of growth rates, where the large cap IT is struggling to even get a single digit type of growth rate? So what has gone right for you guys?
So I would say, Dipen, thanks, and good to have you as one of the shareholders. We love all our shareholders. If you look at the mid cap and the large companies, I think there are 2-3 things that are happening, and especially if I look at it from point of view of Happiest Minds. The first one is, just given the current economic environment, I think some of the large deals that you would typically see, customers are sort of going slow on that, and they're looking more at the small to mid-sized deals, which is what we typically would look for. And because there is work that needs to be done, and when people say that, I keep hearing about between discretionary spending and digital is not discretionary, right? Customers need to continue on their digital journey. They need to continue making investments, but they're taking a step-by-step approach, and that really plays well to the mid-sized players. And if you look at Happiest Minds, playing mostly, being a 95-96% digital company, it really positions us well for all the digital investment and initiatives that many of these companies are planning. And again, if you look at some of the newer technologies that we've invested in, whether it's blockchain, or now looking at ChatGPT, AI, which most of our customers are implementing, and again capturing customer data and doing whether it's recommendation or doing other types of analytics. All of these are things that customers need to continue doing, and that's what I think positions companies like Happiest Minds better in the current environment.
You got a set of happy shareholders, Deepan included. Joseph, Venkat, thank you very much for joining us. It's a great conversation as always. Sorry to rush you guys, but just hitting market opening, but would love to continue this chat. Very interesting to hear insights from both of you. Thanks very much. And thanks, Deepan, for that question. We'll take a very quick break here. We'll just come back and we've got about 7 minutes to go for the pre-open session. We're right back with our technical trades. Sudarshan Sukhani and Kush Bora will be with us for that in just a bit.
IQ Lighting Limited, an Indian manufacturer of LED lighting solutions focused on sustainability and providing low-energy LED products to help India meet its sustainability goals. Initial public offering of equity shares of face value of 10 rupees each through the book building process with a price band of 270 rupees to 285 rupees per equity share. Bid offer opens on Tuesday, June 6, 2023, closes on Thursday, June 8, 2023. For risk factors and more details, please refer to the RHP available on the websites of SEBI, the book running lead manager and the stock exchanges.
The MG Cluster Blackstone. Drive unstoppable.
किराए के घर में कैसा रेनोवेशन? तो सिग्नेचर ग्लोबल है ना, ले लीजिए स्मार्ट डिसीजन.
Keeping up with the pace of life is not easy. To find the perfect balance, we need to savor the pause. See? It never ends.
Okay, welcome back. Just 5 minutes to go for the pre-open session, and SGX is up on your screen, 20 points higher, but the momentum has been relentless. It's been very, very strong, like what you saw yesterday. Sudarshan is with us for his technical trading ideas. Kush Bora is with us as well. Gentlemen, good morning. Good to have both of you here. Sudarshan, good morning to you first. Your thoughts on how we are set up this morning? 150, 160 points separate where we left off yesterday and the all-time high. But how would you trade it?
Yeah, good morning. Well, we traded the same way we've been trading for the last 15 days. Buy on every dip and trade and wait patiently, keep 150 points stop loss, make this into a positional trade. Yesterday I said we should anticipate a breakout, so let's buy call options, and that restricts our risk and gives us reward. And that theory continues. See, Prashant, this market is going up. There's no sense in challenging it. At some point of time, the last buy signal will fail. But that hasn't happened yet. So we won't worry about that point. We'll simply say buy on every dip. Now the Bank Nifty is a different story. It's nervous for obvious reasons. So the Bank Nifty can be avoided. But even prior to the RBI policy, the Nifty is a buy.
Okay, the Nifty is a buy. Kush Bora, founder at kushbora.com, is also with us. Kush, morning. The Nifty, it looks like it's been a buy for a long time, right? Almost 3-4 months now. But at what point would you start to get cautious, or not quite yet?
Hi, Sonia. First up, thank you for having me on the show. You're right. The only play that is there in the market right now is buy. Now, as Sudarshan said, probably the last buy signal will fail, and we'll wait for that. We won't preempt that because typically once the all-time high is taken out, you see the markets rising further from there. So I wouldn't preempt where do we put a short sale or a stopper in the market. As long as the trend is on the rise, we continue to buy. Now, while the markets seem to have factored, optimistic RBI announcement and even the commentary, the return of FII buying after a brief 3-day hiatus tells me that even if there is a decline, there is still support for the market. So for me, Nifty and Bank Nifty both, in fact, remain a buy. 18,850 is my target, and 18,600 is my stop loss. For Bank Nifty, 44,600 is my target, and 44,000 is my stop loss. Obviously, closer to the support levels, the risk reward ratio become that much more favorable. But yeah, I would continue to remain a buyer as long as the trend is intact.
Okay.
In terms of individual stocks, since the trend is intact, we're going to talk about that. But let's take a quick commercial break. On the other side of the break, more on the markets as well as individual stock ideas from the team. Stay tuned.